Believe it or not, there's only three main criteria that we analyze when it comes to approving you for a mortgage. The first one being your debt to income ratio, number two being your source of down payment, and number three being your credit score. So let's face it, in today's high interest rate world, we have high home prices. We're possibly walking into a recession, but I don't think any of that is going anywhere in the central Ohio market, the greater Cincinnati market, and the northern Kentucky market. So rather than sitting on the sidelines, we need to actually prepare you how to buy a home in this sort of environment. Look, it's easy to actually qualify for a mortgage when you break it down into these three criteria. Let's go over the first one, debt to income ratio. We take all of your minimum debt payments from your credit report, add them to your proposed mortgage payment on the house that you're buying, and then divide that into your gross monthly income that's listed on the application. And we have a method for calculating your income, and that's how we determine your overall debt to income ratio. Ideally, you're at 43% and below. However, there are a lot of options out there to go above 43% and even above up to about 60%. So the next thing, number two, is your source of down payment. So as a mortgage lender, we're going to analyze where all of your funds are going to come for the down payment and the closing costs. Minimal down payment on standard loan programs are between 0% and 3.5%, and closing costs are going to generally be about 1 to 3% of the purchase price. So we need to see where all of that money's coming from, whether it's in your bank accounts, it's coming from a gift from family, 401k loans, down payment assistance. There's a lot of different sources or ways that you are going to accumulate your down payment. Not everybody just has it sitting and ready to go. You need to speak with a mortgage lender to come up with a game plan to not only pull it together, but to properly document it, and doing all of that in advance of going into contract so that you are 100% ready to go and close when you find a home. Now, the third thing that we analyze as a mortgage lender is your credit score. So generally, we're looking somewhere between like a 600 and above to qualify you for different programs. Once you have a 680, you're going to have more loan options. Once you have a 740, you're going to get approved for better terms. And once you have a 780, you're just going to get basically the best terms, the most loan options, all available to you once you're at that level. Here's the thing, is it's all about finding a great mortgage lender to help you analyze all this, find out what your goals are, your questions, your circumstances, help you document all of these, and help you ultimately get into contract on a home. So reach out to me and I'll be there to help you.